Hello everyone, welcome to the market opening bell for Friday, April 24th, your 10-minute guide to the stock market. Hong Kong stocks continue to fall on Thursday, dragged down by weakness in technology, automobile and pharmaceutical shares. The Hang Seng Index opened 64 points lower and its decline widened during the session, falling as much as 322 points to a low of 25,840 before closing at 25,915, down 248 points or 0.95%. The H-share index closed at 8,732, down 69 points or 0.8%. The Hang Seng Tech Index closed at 4,865, down 98 points or 2%. Total market turnover reached 255.3 billion Hong Kong dollars. Southbound trading volume total 110.5 billion, while southbound funds recorded a net inflow of $8.598 billion, compared with a net inflow of 4.89 billion on the previous trading day. Southbound funds net bought E-fund, net bought tracker fund was 3.662 billion. CSOP Hang Seng Tech ETF 849 million. Hang Seng China Enterprises ETF 823 million. CNOOC 595 million. Xiaomi 342 million. And Yangtze Optical Fiber and Cable 289 million. The net sold Geely Auto 651 million, Alibaba 595 million, SMIC 502 million, and 3S Bao 158 million. Statistics show that southbound funds have net bought CNOOC for 10 consecutive days, totaling 3.642 billion, while net selling Alibaba for 3 consecutive days, totaling 2.264 billion. The Hang Seng Index lost the 26,000 level and performed weaker than expected. It also broke below the 10-day, 50-day and 100-day moving averages. The next support level to watch is the 20-day moving average at 25,632 points. A-shares opened higher but reversed lower in the afternoon with losses narrowing. The Shanghai Composite closed at 4,093, down 13 points or 0.3%. The Sunchun Component closed at 15,043, down 133 points or 0.9%. The Chinese index closed at 3,720, down 32 points or 0.9%. Turnover on the Shanghai and Shenzhen markets totaled 2.8 trillion yuan. The renminbi central parity rate against the US dollar was set 15 pips lower at 6.865. Hong Kong listed coal stocks rose against the broader market. Recent multiple factors have supported the coal sector. International energy prices remain high and are transmitting to the domestic coal market. As of early April, the Qinhuangdao Q5500 thermal coal flat price stood at 761 yuan per ton, up 7 yuan week on week and 92 yuan year on year. Bid prices also rose, lifting expectations for profit recovery in the industry. Escalating geopolitical conflicts in the Middle East have increased global energy supply uncertainty, pushing oil prices higher and strengthening demand for coal as a substitute. Seasonal factors such as peak summer electricity demand are expected to further drive coal prices upward. Automobile stocks came under pressure, according to Yonhap News Agency. South Korea's Hyundai Motor Group is advancing brand transformation in the Chinese market. At the Beijing Auto Show opening today, it will announce its brand transformation plan and unveil the first China-made mass production model under its electrified Ioniq brand. Earlier this month, Hyundai globally debuted 2 Ioniq concept cars in China, the Venus concept and Earth concept. The mass production model on show features an advanced driver assistance system jointly developed with Beijing Momenta. Hyundai plans to launch extended range electric vehicles in China next year and build an Ioniq ecosystem that combines localized customized services and charging infrastructure. In January, Hyundai held discussions with CATL, Sinopec and Yueda Group on cooperation plans and outlined its medium to long-term development strategy. The company intends to launch 20 new energy vehicles, including battery electric, hybrid and extended range models over the next 5 years. Models such as Elexio, designed specifically for China, are highly competitive in the 120,000 to 200,000 yuan mainstream segment and will directly compete with BYD, Geely and other local leaders. If Hyundai's transformation succeeds, it will prove that joint venture brands still have resilience in China and may accelerate the squeeze on slower transforming second-tier joint venture brands that lack core electric drive technology. Hyundai is deeply integrating its global leading eGMP platform with Chinese local technology such as CATL batteries, Momenta autonomous driving, and Huawei smart connectivity. This combination of global standards plus local intelligence poses a challenge to the leading internet intelligent configuration advantage currently held by Chinese car makers. Beijing Hyundai also has been positioned as Hyundai's global export base, which will lead to more direct competition with local plants in overseas markets such as Southeast Asia and the Middle East. On Korean companies, SK Hynix released its latest earnings on April 23, 2026, showing exceptionally strong performance in the first quarter of fiscal 2026. Revenue reached 52.58 trillion won, up 198% year-on-year and breaking the 50 trillion mark for the first time. Operating profit surged to 37.61 trillion won, up 405%. The operating margin hit a record high of 72% and the net profit margin reached 77%. SK Hynix 2026 HBM capacity is already largely booked by customers. The company holds about 57 to 62% of the HBM market and completed HBM4 mass production readiness by the end of 2024. It's expected to capture around 70% of NVIDIA's next generation HBM4 orders in 2026. As mainstream DRAM capacity shifts to HBM, structural shortages have appeared in standard DRAM, with price increases expected to continue throughout 2026. Philips Securities offers career stock trading services with attractive commission and margin financing offers. Online trading commission is as low as 0.35% with a minimum charge of 20,000 won per trade. Up to 4 times leverage is available together with free custody services. Back to automobile stocks. Chery Automobile announced a global strategic cooperation with NVIDIA to jointly develop and deploy physical AI in assisted driving, cabin AI, and robotics. Chery will adopt NVIDIA Drive Hyperion for L3, L4 intelligent vehicles in the Chinese market. Use NVIDIA Drive for next-generation smart cabin experience and develop humanoid and other intelligent robots based on the NVIDIA Jetson platform. It will also use NVIDIA Isaac Sim and Isaac Root platforms to accelerate the commercialization of its Mojia robots. China Telecom reported its first quarter results ended March. Due to a high base effect, intensified market competition, and policy factors such as VAT adjustments, net profit declined in double digits. Revenue was 131.967 billion yuan, down 2.6%. Service revenue was 122.7 billion yuan. Net profit was 7.35 billion yuan, down 17.1%. Earnings per share were 0.08 yuan. EBITDA was 33.9 billion yuan with a margin of 27.6%. Operating expenses fell 0.7% year-on-year, with network operation and support costs down 1.5%, thanks to AI-powered precise management that improved resource efficiency. 5G net user additions reached 12.32 million, and total 5G users hit 314 million, with penetration rising sharply to 71.3%. China Telecom is accelerating the transformation into a leading AI service provider and is actively deploying emerging areas such as token services under its cloud reform and digital transformation strategy. The Ministry of Industry and Information Technology reported their first quarter telecom business revenue total 4,394 billion yuan, down 1.8% year-on-year, while telecom business volume grew 8.3% at constant prices. As of end March, total mobile phone users of the three major operators and China Broadcasting Network reached 1.836 billion, up 9.201 million from year-end. 5G mobile users reached 1.254 billion, up 49.53 million, accounting for 68.3% of total mobile users. Chow Tai Fook released its fourth quarter 2026 financial year fourth quarter retail data on Wednesday. The stock fell 3.6% yesterday, affected by high gold prices and weak mainland consumption sentiment. The group showed a divergent performance, with the mainland under pressure and Hong Kong, Macau strong. Total retail volume fell 1.5% year-on-year. Mainland China, accounting for 83.7% of retail value, dropped 8.2%, while Hong Kong, Macau and other markets, accounting for 16.3%, surged 58.5%. Same-store sales growth for mainland direct stores was only 0.2% below expectations. Hong Kong and Macau same-store sales jumped 40.1%, with Hong Kong up 36.8% and Macau up 50.1%. Average gold selling prices rose to $11,900 in the mainland and $21,200 in Hong Kong, Macau, mainly driven by higher gold prices. High and volatile gold prices caused consumer hesitation, especially in the mainland. Jewelry products remain weak as consumers prefer value-preserving gold items. Chow Tai Fook continued its store productivity enhancement strategy and net closed 128 retail points in the mainland in the fourth quarter, bringing the full-year net closure to 969 stores. Unclear U.S.-Iran negotiations, rising oil prices, and falling software stocks caused U.S. stocks to retreat from highs on Thursday. The VIX Fear Index rose 0.39 points or 2.1% to 19.31. The Dow Jones fell as much as 628 points intraday before closing down 179 points or 0.4% at 49,310. The Nasdaq fell 219 points or 0.9% to 24,438. The S&P 500 fell 29 points or 0.4% to 7,108. The Nasdaq China Golden Dragon Index dropped 173 points or 2.5% to 6,843. Software stocks were heavily sold. Microsoft fell 4%, Oracle 6%, IBM 8.3%, despite beating earnings as software growth slowed, and ServiceNow plunged 17.8% after cutting its operating margin guidance. Large-cap tech stocks weakened. Meta fell 2.3% as the company plans to cut 10% of its staff next month. NVIDIA declined 1.4%. U.S. Commerce Secretary Lutnick stated that NVIDIA's H200 AI chips have not been sold to Chinese companies, which face difficulties obtaining Chinese government purchase approvals. Warner Bros. Discovery shareholders approved the Paramount acquisition proposal, after which Paramount shares fell 4.5%. On earnings, Tesla reported their first quarter profit up 17%, beating expectations, though revenue slightly missed. Capital expenditure is expected to rise sharply and the stock fell 3.6%. Tesla's official Weibo account announced that its third-generation humanoid robot is expected to debut mid-year, with formal production starting in July-August. Product testing is progressing steadily, and external scenario applications are planned for next year. Intel reported first quarter results beating expectations, driven by AI-related demand. Adjusted earnings per share rose to $0.29 from $0.13 a year ago. Revenue grew 7% to $13.58 billion. The stock rose 16% in after-hours trading. American Express reported first quarter net profit of $2.97 billion or $4.28 per share, beating expectations. The company reaffirmed full-year guidance. Honeywell reported first quarter sales slightly below expectations, but raised adjusted earnings per share. The company maintained its full-year outlook. Hasbro reported preliminary first quarter revenue and operating profit above expectations, boosted by strong performance of its Magic the Gathering card game. US April S&P 5 Global Composite PMI rose to 52 from 50.3. Manufacturing PMI climbed to 54, the highest since May 2022. Initial jobless claims were 214,000, roughly in line with expectations. Our stock pick today is Mininglamp Technology, stock code 2718. Mininglamp Technology is primarily engaged in providing marketing intelligence services, operations intelligence services, and industry solution services. Rooted in its sustained and massive accumulation of marketing data and client business scenarios within the data intelligence business, the group has built its agentic services business segment from 0 to 1. In the marketing field, the group has developed the DeepMiner marketing business workflow, which delivers an end-to-end full-chain service covering marketing insight and planning, multimodal content production and distribution, through to marketing placement. This enables the group to directly deliver quantifiable marketing results to clients, achieving an average 20% improvement in marketing effectiveness with nearly 3 times the operational efficiency. In the content field, the group identified greater opportunities while extending from its marketing placement services, namely the generation of digital content. Leveraging its AI-driven technical service capabilities, the group started from advertising placement services and gradually penetrated into the intelligent planning and technical orchestration of digital content. It has successfully built a complete closed loop from digital asset research to full domain distribution and monetization. This represents a natural extension of the agentic services model within the digital content ecosystem. For deepening and expansion of customer value, accompanied by the group's evolution of products and services from data intelligence to agentic services, has led to substantial progress in both the breadth and depth of its client relationships. In 2025, the renewal rate for major clients reached 96%, with the core client base remaining stable. More than 30% of newly acquired major clients came from the agentic services business, validating the applicability of this model across different client types and application scenarios. In terms of service depth, the group has achieved full chain extensions with several leading clients, progressing from data insights to content production and marketing execution. For example, a well-known automotive brand client building on data insights further entrusted the group with content production and marketing placement execution, achieving a complete upgrade from insights to results delivery. In terms of client structure, the group has successfully expanded its services to more domestic brand clients as well as the overseas operations of multinational clients. For instance, a prominent smart consumer electronics client extended the group's services to multiple global markets, enabling cross-regional brand communication effectiveness, tracking, and analysis. In 2026, the group's core mission is to scale up its proven agentic services delivery capabilities, including systematically replicating the validated agentic services model across a wider range of scenarios and client groups. It will continue to deepen its capabilities in content marketing and content entertainment sectors, continuously improve operational efficiency through AI-driven transformation of business production processes, and actively explore agentic services opportunities in more digital white-collar work domains to expand the boundaries of agentic services. The group also plans to collaborate with hardware manufacturers to develop small-size on-device models, enabling intelligent agents to operate locally within enterprises and addressing data sovereignty and inference cost issues. Additionally, it will systematically advance the overseas expansion of its products and services, going global using domestic enterprises going global needs and digital content as key entry points. Recommendation: buy in price $235, target price $260, stop loss $223. I do not hold the above stock.